Alright, alright, ladies and gentlemen. We're gonna talk about the manliest, most delicious, strong, manly man truck driving stock ever. Ford stock. That's right. Very manly. Because if you go and buy a Ford, you get a huge truck payment, you're obviously a freaking manly man. Let's go check out Ford, because apparently I hear that Ford stock's going bankrupt. So we're going to go check out Ford, which has been around for like, what, 100 years? And we're going to see what happened with their earnings. So these are the most recent earnings of Ford My Battlezord. If you ever watched, whatchamacallit, Power Rangers, you know what a Zord is. All right, so here's Ford. Fourth quarter revenue totaled $44 billion with net income of $1.3 billion. Adjusted earnings before interest and taxes of $2.6 billion. All right, that right there is clown earnings. So you don't need to worry about it. Now, I like to look at year over year. So their fourth quarter revenue was $44 billion. If we go look at their last quarterly revenue, Q4, they had $37 billion of revenue. So their revenue has actually gone up pretty significantly since the last quarter. Okay. Seems like a dying company now, doesn't it, huh, ladies and gentlemen? Their net income was $1.3 billion. So let's do 1.3 divided by 44. So their net income for the quarter was 3%, which is pretty freaking low. Okay. So they had 3% net income. For the same quarter the prior year, they had net income of, well, it says 32%. There must have been some kind of like special item or something, some kind of maybe tax benefit, because that's not a typical net income. But you look at Ford's normal net income, -2, 1.6, -9, 32, 5, 2, 9. I mean, really, the net income, it isn't atypical what this most recent quarter had. Okay. So nothing insane yet. Full year net loss of $2 billion attributable to special items. Well, let's go look at the full year, because apparently the full year they had some big losses. So if we go back and look at prior years, we can see Ford's net income hasn't really been negative. Okay. I mean, when you look at it from a yearly standpoint, in 2021, they had a pretty good year. They had a 13% bottom line profit margin. But on average, it looks like they have a 3, maybe 4% profit margin. So because of this special item, they had a net loss. Now, the question is, what is a net loss? Usually when you have a net loss, sometimes it's because of a one-time write-down. And when you're looking at a company, you can't necessarily say the company's doomed forever because now they're unprofitable when they just had maybe a one-time impairment charge. And I actually like how they have all their little links up here. That's cute. Okay. First quarter regular dividend of 15 cents per share. Oh, wow, a dividend. Okay. Company anticipates full year 2023 adjusted EBIT of $9 billion and adjusted free. Okay, that means absolutely nothing to me. So basically, they're saying their operating results were below expectations. But what I want to do is just go look at the financial statements and see if this company's dying. Okay, because that's what I hear is that Ford My Battlezord is just completely going out of business, and the only car company, obviously, is going to be Tesla. I mean, obviously, everybody in the world is going to buy a Tesla. So let's go ahead and look at the consolidated statement of cash flows and see if we can figure out what's going on with Ford. And by the way, ladies and gentlemen, I do have a seminar. You can click this link here. Saturday morning, click the link. If you want to sign up, you can attend the seminar where I teach you the statement of cash flows. And oh, by the way, I'm doing it on Tesla. So if you want to see Tesla's statement of cash flows and be taught about the statement of cash flows, click that link and freaking pay me. All right, let's look at the statement of cash flows. So for the years ended December 31st, 2020, 2021, and 2022. So we can see their net incomes all over the place, right? There's net income on the top here. Negative 1.2 billion, 17 billion for 2021, and negative 2 billion. So their net income is like all over the place. Now, what we're looking at here is 2022, this one on the far right. So we can see they have a pretty big add back for depreciation and amortization, 7.6 billion. Ford is a very capital intensive company. They have factories and massive overhead. So there's going to be a lot of depreciation expense, which is a non-cash expense on the income statement, but it gets added back on the statement of cash flows because it's a non-cash expense. All right. We have a subtraction here. So some kind of like positive, there was some kind of positive adjustment on the income statement that is then subtracted on the statement of cash flows. Let's see if there's a big number under operating activities, an add back to see what could potentially have led to this loss. So we have the equity method investment dividends received in excess of earnings or losses and impairments. So I'm guessing Ford basically got a bunch of, I don't even know what's going on with that. Apparently, they had some massive write down, some massive charge on their income statement for equity method dividends received in excess of losses and impairments. So basically, an equity method is when a company like Ford owns another company. They don't own the entire company, they own between 20 and 50%, and they have significant influence. So they can kind of control what's going on with the company to a certain extent, but they don't actually have full control of the company, basically 50% of shares plus one. So how the accounting works is when you have an equity method investment, when that company has a gain, you actually have to increase the investment on your balance sheet and record income. Or when the company has a profit, you write up your investment on the balance sheet and you record income. When the company that you partially own has a loss, well, that hits your income statement. It's the same thing with Berkshire Hathaway. I've never seen this equity method dividends received in excess of losses and impairments. I would have to do more research on that. But apparently that's been a pretty big, that was a pretty big charge on their income statement, which is why it's being added back. And you can see it's unusual because in 2022, they had 130. In 2021, they had 116. And then in 2022, they had 3.3 billion. So some kind of whatever investments they were invested in absolutely crushed their income statement. Without that atypical charge, they would have been profitable. We keep going down. Net realized and unrealized gains or losses on cash equivalents, marketable securities, and other investments. Here's another thing that negatively impacted their profit. They had a $7.5 billion charge on their income statement for 2022 from some kind of investment. Whatever they were invested in had a massive write down or massively decreased in value to the tune of 7.5 billion. So they had to write that down on their income statement, even though there was no cash impact from that. So if you do exclude these one-time charges, yeah, they would have been profitable on a GAAP basis. Now, what they were investing in, I have no idea. I don't really do a lot of research into Ford stock, but that's 100% why Ford was unprofitable on a GAAP basis. And that's the one-time charge that they're talking about, okay? So we go down and we can see that overall, the picture isn't that great. So cash provided by operations, which is the whole point of the statement of cash flows, has been going down every single year. Look at this. They had $24 billion of positive operating cash flows in 2020, the cloud market, low interest rates, $15.7 billion in 2021, and $6.8 billion in 2022. So their cash from operations, that isn't a good trend. Okay. I'm not going to say, it's fine. Their cash flows are going down significantly. And if we look at their cash from operations on the statement of cash flows, they generally have pretty decent operating cash flow. I mean, if you go back and look, honestly, like it's been more than a decade since they had cash flows from operations that low. So that's pretty terrifying. Okay. I don't know exactly what's going on here. I guess they're whatever they're freaking doing. But yeah, that's a worrying trend. I would be very concerned about their cash from operations going down pretty significantly. Okay. But whatever. I'm not invested in this stock except for VT. All right. So then we go down to investing activity. So we can see capital spending has been trending up a little bit. So cash flows from operations are going down. Capital spending is going up. Acquisitions of finance receivables and operating leases. That's basically them paying for leases. Okay. But overall, their capital spending is roughly, it's going up a little bit every single year. But there's nothing out of the ordinary. If you look at each one of these line items, there's nothing that's really crazy or jumps out to me. So overall, their net cash used in investing activities was negative 4.3 billion. So they still have positive operating cash flow. It's going down massively. and they obviously spent more money on investing activities. Then we go down to financing activities. They're paying dividends. Okay, here's what I don't understand. Why are they paying such huge dividends? What are they doing? Look at this. Their cash flow from operations has been going down, 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 down every single year, and it's at like 10-year lows. And then they're paying like 4x the dividends. If this continues, no, they're not going to be able to sustain that kind of dividend. No freaking way. They did a massive dividend. So they did 4x their normal dividend. They bought back some stock. Let's see. They went into debt, both short-term and long-term debt on a net basis. They only packed on a little bit more debt. But overall, I mean, they're cutting it pretty tight, okay? I don't know why they did that, but whatever. So overall net cash provided by financing activities was 2.5 billion. So overall, their total cash position did go up year over year. Now, like I said, if you're buying forward for the dividend, I'd be a little concerned about these operating cash flows. You need to really look into why. See if this is a one-time thing or if this is something unusual going on. All right, let's look at the income statement. Now, the income statement looks pretty good, okay? You can see their revenues are going up every single year. Their full 2022 revenue was almost $160 billion, okay? What is that, like 2x Tesla? Tesla! And if we look at their historical revenues, so I keep hearing from Tesla shills that, Ford is like dying and they're not getting sales and blah, 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 blah. But then you look and it's like, okay. I mean, yeah, their revenue has collapsed for a couple of years and now it's come roaring back. I don't know. Now, inflation adjusted, maybe inflation has something to do with this. I don't know. But their revenues have gone up every single year. Okay. Their gross profit. Let's look at their gross profit historically. So historically, their gross margin has been in the low teens. Okay. And they had a terrible gross margin in 2020, but we'll forgive them that. That was an unusual year. So this is the line right here. So it's in the low teens. Now for this report, their gross margin was 134.3 divided by 158. Let's just say 0.1. Oops. What the hell did I do there? 158 minus 134 divided by 134. Wow. Their gross margin actually went up to 18%. Let me make sure I did that math right. It's a little late. Forgive me. 134 divided by 158. Okay, 15%. So their gross margin was 15%. I mean, that's not out of the ordinary. I mean, it's not great, but their gross margin has improved, especially since the lows of the pandemic. And basically, to calculate gross margin, you just take total revenues minus the cost of sales. Now, if you want to focus on automotive margin, you'd have to, I don't know if this is broken down by automotive margin or not, but you'd have to take the automotive revenue minus the cost of sales, assuming this is associated with the automotive. I'm not really sure. But overall, we keep going down the income statement, okay? Their operating income went up every single year. That's a good thing. And then, oh my God, we have this loss. Now, where did this loss come from? It came from other income or loss, some kind of one-off charge that made them unprofitable. So if somebody's sitting there saying, oh, Ford's unprofitable, oh, it's dead, look at their net income. Okay, well, you know why? It's all over the place. In 2021, they had some massive other income that massively boosted their net income. And then in 2022, they had some, one-off charge that made them unprofitable. So it's kind of like, bouncing around all over the place. But the core business, the operating business, at least from an accrual basis of accounting, is doing fine. Now let's compare that to prior years. What was their operating income? Let's see. Let's zoom out a little bit. Okay. So historically, their operating income, they're right in line with their operating income. They're actually doing better than the last, I don't know, 5, 6, 7 years. Not the worst thing in the world. Okay. Let's go look at their statement, or let's go look at their balance sheet. So looking at the balance sheet, total current assets have gone up, and we'll compare that to total current liabilities. So total current liabilities are 96 and total current assets are 116. Let's see. They have cash, cash equivalents, marketable securities, and Ford finance or Ford credit finance receivables. So overall, their balance sheet position is not the worst in the world. Their current ratio is roughly, let's see, 116.4 divided by 96.9, 1.2. Okay. If we go look at the historical current ratio, wow, it's 1.2. So their current ratio isn't out of the ordinary. I don't know. I don't see like imminent bankruptcy here. All right, let's do long-term assets. So Ford credit receivables, okay, nothing really crazy here. No big changes in assets. Let's look at liabilities. No real crazy changes. Okay, a little bit of long-term debt. I mean, overall, the balance sheet's not the worst freaking thing in the world. Okay. I don't know. I don't think they're going bankrupt, at least in the near future. I don't know about anything else. Now, they do have this accumulated other comprehensive income and loss. This is probably has something to do with, I think they have pensions. They have some kind of like pension thing going on here that would show up in accumulated other comprehensive income. And that's going to weigh on their equity in the long run if they have, issues funding their pensions. But overall, I mean, I don't know. I don't see a dying company here. I mean, I think they made some weird decisions. Like, I'd really be questioning if they had such tight operating cash flow, why they paid a dividend. Why did they pay a 4x dividend that they normally pay? But I don't know. I don't see it going out of business anytime soon. The big worrying sign is this decline in operating cash flows, but it could be a one-off thing. Okay. Could be from this increase in finance receivables, wholesale and other. Maybe that's just like a one-off thing that massively swung their operating cash flow. That's the one thing that I see that's massively different here. So overall, I don't know. I'm not concerned about Ford going bankrupt. Let's see. We'll do some comments. You can never go wrong with a Ford truck. Ford can't build cars. What? What are you talking about? Supplemental dividend 6.5. Okay. Like I said, I don't track Ford at all. I just wanted to look at the financials with like a fresh mind and just kind of get my thoughts on it. Like I said, the big thing is that decline in operating cash flows, but revenues are up. Operating income is higher than it's been in a couple years. And they're not imminently going out of bankrupt with their current assets versus their current liabilities. I don't see a massive problem. I would really, if you want to really research Ford, dive into why that operating cash flow was so much lower than historically. Let's see. Ford's new sports car, the Ford Mustang, will be the best car coming into it. Ford, I have a Ford. It's not a course, it's a seminar, bro. That's right. Everybody click on this link and sign up for my statement of cash flow seminar, okay? That was a brief introduction to the statement of cash flows, but I will be doing Tesla's statement of cash flows this Saturday at 9:38 a.m. Eastern. All you got to do is pay me $50 and you can watch me teach you the statement of cash flows. Or you could watch Farzad Mesbahi. I mean, obviously that guy knows everything there is to know about the statement of cash flows. Let's see. Yeah, to be honest, I think the main reason the operating cash flow is so low is this increase in finance receivables. I don't know. Maybe it's a huge, that's a $17 billion swing year over year. So even though that operating cash flow is going down, let me share my screen again. Like I said, you have this decrease in financing. So when you look at the statement of cash flows, right, what they do is at the top, they start adding back non-cash expenses and subtracting like non-cash gains or other income items. And then as you make your way down the operating activities portion, then it gets into changes in balance sheet items. That's what it gets to towards the bottom. So apparently there was a massive increase in finance receivables. So that they have some kind of receivable and they recognized revenue from that receivable. They just haven't collected the cash from that yet. But there may actually be a huge swing in operating cash flows the next quarter when they collect those financing receivables. So this, even though this looks bad, it may not be as bad as you might think. That's all I'm saying. Okay. Am I buying Ford stock? No, I'm buying VT. Sue me. Ford is the next Tesla. Meet Shill Kevin keeps saying Ford is going bankrupt. It's not going bankrupt. Okay. I mean, like, you look at their liquidity ratios, it's fine. Okay. You look at their operating cash flows, it seems like it's that one balance sheet item, which eventually will be collected as cash. Hopefully, as long as the credit isn't bad, that'll be eventually collected as cash. If they were really worried about bankrupt, I don't think they would have paid out that dividend. I think the finance people in Ford are like, okay, we have this big receivable. We're going to get a bunch of cash in 2023. And that's what I would look out for. Like, okay, I mean, yeah, well, it might be a little tight, but, we do have positive operating cash flow. But their revenue's up. Their operating income's up. They had a net loss, but that's only because of some kind of one-time charge. I don't know. Let's see. Buy my seminar, bro. That's right. Got to make money somehow from you clowns. Long live strongman. He wants 50 for the seminar. That's right. Bro, this is why these income statements are BS. He doesn't know what they invest in. These only give snapshots of cash flow. Yeah, that's the whole point of financial statement. People don't even look at the financial statements. You can't just listen to these clowns on the internet and just, Ford's going bankrupt because, without even looking at the financials. You need to have a basic understanding. You can apply that knowledge with some additional research into what's going on with the company and come to your own conclusions. But you can't sit there and just be like, looking at numbers is stupid. It tells a story. It tells the story of why there was a profit, why there was a loss. It's hugely important to understand how to read financial statements. They sold off their Rivian investment. Yeah. Let's see. It doesn't give info on how they invest and what they are putting there. It gives exactly what they're investing in. Okay, at least the amount of cash. Now, sure, there's more to investing than just looking at the financial statement, but you have to understand what you're looking at, okay? If you don't understand financial statements, you're a clown investor, 100%. Let's see. Ford stock was always less than $15. Let's see. You can't tell why the cash flow is going down. Actually, I can. I just showed you. It's because of that financing receivable. They recognize revenue because they earned it. They just didn't receive the cash. That's why their cash flows are down. But I need more detail. You need to tell me 100% of everything, bro. You should understand every detail of Ford. I don't need to. Send your viewers back to my channel. No, I'm grifting right now. Poor Ford, their Rivian investment didn't turn into the next Tesla. They're still chugging along, man. Like I said, income up, or revenue up, operating income up, cash flows. I think that's a temporary discrepancy that's going to be worked out in the next couple of quarters. I don't see bankruptcy, but you go, Tesla's going to take over everybody. Everybody's going to buy Tesla. Yeah, Tesla's going to go to the moon. Ah. Hate that crap. Ford owns 11% of revenue. One-time charge. Like, yeah, that's right. Uber. All right, I think that's it. Let's see. Any more interesting comments? I don't know about operating cash flow and dividends and stuff, but Ford is reading the market better than most car menu. I mean, yeah, there's like multiple. You can't just look at financial statements. Like I said, you have to understand like the macro environment, and you have to understand like the competitive landscape with the auto industry and investments Ford is making now. But if you can't read the statement of cash flows, some clown is going to come on here and say, see, their cash flows from operations are going down, even though it's just because of that one-time change in a receivable where they had to add it, or they had to subtract it because they recognize revenue, but they didn't collect the cash yet, but they earned the revenue. That's why. Buy Tesla, bro. Let's see. Why do you always call us clowns? It's like a general thing. Like, you're all clowns, okay? I'm not calling you a clown unless you are a clown. S-Dow is doing better. Okay. All right, guys, that's it. Just a very cursory analysis of Ford. Obviously, you need to do more. I've done zero research into Ford. I just wanted to look at the financials because I always hear these clowns saying these most ridiculous things. And it's like, is this true? Is Ford dead? Does it look like it's going bankrupt? I don't know. All right, guys. Talk to you later. Cheers.